Hello, fellow traders. 'Tis I, the Rumpled One. It is Thursday, March the 8th, the year 2018. Let's talk trading. Failure. I had an idea long time ago, a couple decades ago. Remember when Success magazine came out? I thought it'd be a good idea to have a failure magazine, because sometimes you can learn a lot from failures, and hopefully you do. The reason why I'm going to talk about failure today is because in trading, not every trade you put on is going to be a winner. So you need to know when that trail fails, when that trade isn't going to be profitable. It fails to be profitable. And staying in that trade any longer could prove damaging to your account. The thing is, when you get into a trade, when you decide to hit that enter button, before you hit that enter button, you need to know the location or the price. That means you were wrong. You guessed wrong. You thought it was going up, but nope, it's going down. You thought it was going down, and nope, it's going up. You need to plan that out or plot that out ahead of time. Because if you don't, well, then you could just wind up blowing your account. And that gets right into this screen that you guys probably love seeing on a regular recurring basis. Money and risk management. So in other words, that stop loss that we talk about, that's the fail point. Whether it's 10 pips from where you enter or 2 pips from where you enter, wherever it is, or 100 pips from where you enter. But if price hits that fail point, that stop loss, that's the get out time. That's the, you know what, you can't win them all, so you might as well, pack it in. So let's look at the weekly chart here. And if I remember correctly, yesterday, dollar Canadian was somewhere up here. And as you can see, it fell back down. And because I think this was almost, it's like 90 or 100 yesterday. See, now it's only 16 pips above that weekly open. But you can see here, there's some other pairs that have some still nice moves away from that weekly open. And some of these looks like they may have just crossed. But still, once again, see, now we have 3 pairs that are below the weekly open and everything else is above. That's just something we're going to have to keep an eye on. Because it just, something about that just doesn't seem quite right. And the reason I say that is, I mean, for example, if you've got the dollar-based pairs, if they're up, then the dollar-quoted pairs should be down. But they're not. So something's just kind of strange about that. If anybody's got a good explanation, I'd like to hear it. And let's look at the daily charts. And as you can see here, dollar Canadian went up and then it came back down. So you see it was in that daily wick zone, which we'll be looking at shortly. But now it's back here in the body of the previous session's candle. We've got only less than a handful of pairs that had range over 100. So it looks like not too much volatility today. And now we're looking at the buy zone. And see, the buy zone shows a very good example of when a trade fails. So for example, if you were to buy here and you just riding that trade out and it gets up to here, you see here It made a new high, but then it failed to sustain it. So right there, you take your money off the table. Now, if you didn't do that and it crosses below the open, well, that's your first indication that this trade isn't working out right now. And if you don't stop there, right here at the sell zone, the short zone, this is telling you to go short. And when I first, put this system out there for everybody to take a gander at, I was trading stocks at the time. Everybody kept asking me, what's the stop loss? What's the stop loss? And to me, it was kind of obvious, because if price is above the daily open, you want to look for longs. And if it's below, you want to look for shorts. So, like I said, that's clue number one. Clue number two is this is the trigger area. If your long and price goes into the short trigger area, it's telling you that you need to be short, which means you need to exit that long. And so, in other words, if you buy here, this is your fail point. If you sell here, this is your fail point, or the second, crossing the open could be the first fail point. But going into the next trigger zone is definitely a fail point. So, once again, it was kind of obvious. I thought it should be obvious to the reader what the stop loss is. I mean, it just makes sense. So, and as you can see here, this hour, there was a short trigger, and there was an opportunity to pick up. Let's do this little trick here. What do we got? 10 pips or so? 11 pips. Not a bad trade. And here we go. You can see here, when price put in this low, we may have had a rat zone trade, but once again it bounced off that low at the 20 pip mark and came up here, put in a new high. As you can see, we had a last chance to go short, and the rat zone was here, and it's all the way back down into the buy zone. And so you can see that's what, 31 plus 13, or what we could do, this nice little trick here. And what, 43 pips? Once again, not a bad trade. And we're looking at the pivot. There's the open, there's the pivot. You always trade away from the open towards the pivot. And right there, it paid off. So you can see, if you're looking for a simple trade, just fading the pivot, and that was worth about 25 pips. Once again, not a bad trade. And the price action, and I really hope I cleared up those price action questions. Some guy was talking about going back to the C4. He was wondering about the 3-level ZZ, and it's, once again, when these first appear, what it's telling you is price is breaking out. And then what you have to do is you have to wait and watch and see, okay, so it broke out to the downside right here. 3 ball appeared. Price came back up. Next candle open. What happened? It put in a low, but not a lower low. And then it stopped. So you've got a low, a lower low, a higher low. So, and you've got a 3 ball here. So this is where you can start to take your chance of taking that reversal. So right here you've got a turn trade, opportunity, red, green. You can either do a rat reversal, you can do it, turn trade reversal, or you could do just a simple horizontal line reversal. I think it's early. I keep mumbling my words. Sorry about that. Anyway, so there's your price action. So once again, you see here, it put in a 1 ball, It's moving off the 1 ball, and you see that 1 ball is higher than that 3 ball. So this candle's gonna close in about 5 minutes and 41 seconds. And then you can maybe see if you want to grab another reversal trade. It's right there at the 129.00 mark. There you go. And you see you've got the 1, 5, and 15 are all green. And there you go. There's been 5 pips. That's usually what we try to grab as a quick 5. And there it was right there, right before your eyes. Even though for the novice trader, you wouldn't want to trade against the H1 candle color. But you see here we had the 1, 5, 15, and we're trading at 00. We just know we can usually punch it for somewhere between 2 to 5 pips. And as you can see, if you didn't take those pips quick, you'd be right back to where you started. So there was right there, real time, while I'm doing the video, showing you how that works. But as I said before, if you're new to this, you don't want to trade against the H1 candle color. That's the rule of thumb. Now, you also see it's moved what? Almost 20 pips off that. So you see all that push. You don't want to trade against that. So once the first time this candle opened, it opened here and it was going red. So you would have taken that short. Now, I said if you have experience at trading the 00, you could have gone long there. But right now, because of this push versus this push, new traders should just step to the side, because there's too many things. You've got all these buyers pushing back. You have the sellers saying, no, we want to go this way. So it's not giving a very clear signal for the new people to trade, because you need to be quick. Because you see here, it just gave up another, I think I saw an 06 there not too long ago. So once again, you could have hit that for 3 to 5 pips. Oh, there's a 6 right there. And that's how you trade that. And so actually what we probably would have been on the M5 to do this. So you can see here, you see that price action, and there you go. Okay, let's only got a couple more minutes left. So this new version of Screencast-O-Matic, this web-based version, it only allows 15 minutes on the video. Also, so here we've got the 5 lines from yesterday. What do we got? Oh yeah, we got open and low was the same. So it looks like there's only 4 lines, but I can see the blue in there. So once again, trading candle color at the line. As you can see here, there was a bunch of chops, so you had to just either scratch the trade or take a couple pips right here. It broke out, but came right back, so you had to probably scratch that trade. Here's a nice trade. There would have been a nice trade. Once again, you can see here, you could have taken that short, and now it's all the way up to 17. It's turning that red H1 to a green. So probably me and my buddy Airball, we'd be, we had taken that 5 pips and we left 14 on the table. We'd be a little on the upset side, but that's okay. We'd have probably hit it 2 or 3 times and made that much anyway. Okay, here you go. Wick zone. Price doesn't like staying in. The wick zone, in and out, and in and out. Holo zone. Right there, came close, turned around and reversed. You see what happened. Trading the tick chart, as you can see, price came above the valley and would have been a profitable trade. So that's it, traders. Oh, what's this? Oh, this was just the showing you the price action screen from the other day. So that's it, fellow traders. We'll see you again tomorrow. Hopefully you're having a profitable day. Remember, it's not what you trade, it's how you trade it. TheRumpledOne signing off to drain the banks.